In this video, guys, I'm about to reveal the simplest, most no-nonsense trading strategy you will ever encounter in your entire trading journey. No cryptic acronyms, no magic price points, no overcomplications. Just a rock-solid process centered on one undeniable truth about the markets. Something that happens every single day without fail. And here's the game changer. Over the next 10 days, I'm rolling out a 5-part series designed to completely transform how you trade, study it, digest it, execute it. By the end, you won't just feel like a different trader, you'll be one. 2025 is yours for the taking, and this strategy is your key to making it happen. Let's dive in to day one.
Understanding the strategy or understanding any strategy is the most simplest thing that you will learn on this journey. The reason why you find or will find trading difficult, guys, is because of the immediate results that you get. Then it's your perception of the immediate results that you get that affects you emotionally, that then unfortunately creates that ripple effect that you start then going on to doing silly things like revenge trading, etc., etc. I just want you to know this. After this week's masterclass, we'll do 5 sessions this week. You'll have a very good understanding of how to approach the markets. But after this week, it is going to take a lot of effort, a lot of losses, a lot of break evens, a lot of testing to figure out whether you're going to be going break even, whether you're a partial trader, whether you're a 4H 15-minute trader, whether you're a 5-minute trader, whether you're a 1-minute trader. And that is something I really want you guys to focus on very, very intently. And I just want to make this clear. We're into the 4th month of the year. Okay. There is a very long way to go. And if you can apply yourselves individually, and it's going to take a lot of effort, but if you apply yourselves over the next 90 days to what you're going to learn this week, and then really create a plan and stick to it and follow it, I can promise you guys, I can promise you by the end of it, you'll be in a very, very good position. What does that position look like? Well, let's think about it. End of April's a month. End of May's another month. End of June's another month. Halfway through the year, you can set yourself up to such a high place or to a high level or standard or whatever you want to call it, that after that, you will still have another 5 months of this year to take your challenges and get funded. But you can only do it if you apply yourself over the next 90 days. And I really want this to be something that you do. What do I mean by that, guys? I mean, make sure when you come to your charts and you look to take a trade, you are taking a trade that you are comfortable taking and you perceive to be a higher probability trading setup. If you take a loss, you must walk away. If you can only trade the New York session, don't wake up early to try and trade the London session. If you only can trade the London session because you have to go off to work, don't try and look at your phone to trade the New York session. Guys, it's not about how much work you put into the charts or how many hours you spend on it. It is how smart you are with the time that you do have. And listen to me, but if you use a positive risk reward ratio, this is your edge, this is your sword. That is what will make you money. Some days you will have to take 1-hour trades, and some days you will have to take 2-hour trades. Some days or once or twice a week, you might get a 3-hour trade, or let's just say once a week you get a 3-hour trade. What you're working towards is not trying to maximize your profits on a daily basis. You're trying to maximize your potential, working on your patience and your discipline. Then after that point, you are just supposed to show up, execute or do what you have to do, and then continue that process over and over again until you get to that trade, which might be the 2nd week of the month or the 3rd week of the month. Or it may not even happen this month, that you execute and is a trade that absolutely takes off. Like today, we've seen yen weakness. We've seen the strength in gold. If you were able to capitalize based on the plan that you've built up because you had a solid plan that you had confidence and had faith in, you would have made a lot of money today versus last week, which might have been a little bit slower. But if you were doing dumb shit last week and then you took a good trade this week, all you're doing is just clawing back and you're not progressing. So I need you guys to get serious and really think about this. So the plan is, I'm going to show you, share with you a simple thought process when it comes to trading. Then I'm going to share with you a concept using the 4H and 15 minute tomorrow. Then on Wednesday, I'm going to share a concept using the 1 hour and 5 minute. Then on Thursday, I'm going to share with you a 15-minute and 1 minute concept. And then on Friday, I'll get you all back on and we'll go over the markets. We'll look at some of your trades. We'll answer your questions. We'll go through the charts and look at some examples. But I urge every single one of you at the end of every lesson, or when you've got a minute, to listen back through, write your notes, find the key points, stick them on your wall, make a diary, journal, I don't care what it is, and formulate a plan. Once you formulated that plan, then you need to stick to it. And what I want you to be doing over the next 90 days is your 100 trade challenge. Some of you might be here and you might be funded. I can see names here that are funded. I know there's traders here that are consistent. I can also see traders here that have spoken to me that are finding that they're struggling in certain areas. Wherever you're at on your journey, guys, I need you to identify it, be realistic. If you're not making consistent gains right now and you're not profitable, then there's no reason for you to be trying to make money. Zero reason. You're only slowing your progress down. What we need to build over the next 5 days and then working towards the 90-day milestone is building a solid foundation. And then once we've built that solid foundation, we can build on it. How it would look for me, the next 20 days, I'll be focusing on identifying what really works for me. Do I like trading the higher timeframes or the lower timeframes? I'll formulate a plan that I perceive, that I believe is what will work for me initially based on what you're going to learn this week. And then at the end of the 20 days, say, this didn't work, this didn't work. That could be anything from trading 5 pairs to whittling it down to 2 pairs, trading London and New York and whittling it down just to New York, identifying breakouts as being your forte, identifying retests as being your forte and whittling it down. Whatever you think that has aided towards your progress, make sure you put it down in your journal or in your trading plan. The next 20 days, I would then be focusing on really zeroing in on that plan, logging my trades, taking screenshots, making sure that I'm not deviating in any way, shape, or form. What we're trying to do in the next phase, in the second phase, is we're trying to figure out what is working for me. Can I really get results? If you can get results in that second month, then guess what? You move on. And what I would move on to is doing trial challenges, just to get yourself comfortable with the feeling. Not that it prepares you for the real thing. I'll be brutally honest with you. I've spoken to so many students that have smashed trials and then absolutely gone tits up when it comes to the challenge. But you start to reinforce that belief system and that confidence and that faith that you need to get you through. Because right now, guys, if I ask you if you can trade, I'm sure all 90 of you will tell me yes. The only problem that you're struggling with mainly is confusion to what concepts you want to be laser focused on and your mindset. And I don't blame you. You know, we've just gone into the 4th month of the year and you probably had many plans and resolutions that you'll be at a certain stage at this time and you're not there. I get it. But I can promise you we can change it around. Okay, we can change it around. But they are the only 2 things that is holding you back right now. Some of you might have family issues, work issues, whatever else. I do get that. But guys, if you really want to make this happen, you've got to try and figure those out. But we're not going to go deep into that. We're going to focus on this. Let's figure out what concept you want to trade. Then let's start working on our mindset over the next 90 days. By the end of it, guys, I can promise you, you'll look back and say, wow, I remember this session. And I can't believe how quick it's gone. 90 days are going to fly by. But 90 days, I really do believe, and that's why I set the 12-week workshop up for 12 weeks, because I really do believe that is all you need. Okay? So, do we have any questions? No. All right, let's go. So, guys, in terms of trading, what I need you to understand is this, and I do want to start seeing this in the chat. when we come to the charts, what directional bias would you say this structure is? If you guys can talk, unmute yourself and just come forward. What market structure do you think we're looking at right now?
Range.
Okay.
Sideways.
Sideways, very good. Okay. Now, what if I said you were all wrong? Would you understand why I said that?
Because the market's moving up.
Okay. The reason why I'm highlighting this is because I see a lot of this in the group. Okay. I see a lot of key levels. I see a lot of this, and I see a lot of this. This is not important to us, guys. It really is not important to us today. Actually, let me come off gold. Okay. So let me clear this. So looking at this market structure, which direction is the market going?
North.
Up.
Yeah, north. Okay, cool. So I kind of think that we gathered from the last one that this market structure is going up, okay? What I want to make clear to you, first step, is when you come to the charts, you do not need to worry about what is happening here. Do not need to worry about what's happening here. You don't need to worry about what's happening here. You do not need to worry about what's happening here. Your sole purpose or your sole aim when you get to the charts is to get in the charts, zoom in, and focus on this information here. Does anybody know why this information is more important than anything else that's happening on the charts right now?
Because it's most recent data from
Very
the
good.
market.
It's the most current data. Now, what kind of traders are we?
Day traders.
Very good. Most of us are day traders, intraday traders. So if we were swing traders or we were paid to be market analysts, we'll probably write out a big old description of, what is happening in the markets right now, et cetera, et cetera. And we'll say certain things like this. We'll say, well, the high that that pound JPY put in around the 28th of March is around, what is it? Can't even see my numbers. 164.16. At the moment, I can see price has been ranging between 161.48 and 162.45. The previous structure of the market has bounced off of 159.25. We can see we've made consecutive higher highs and higher lows. Once price broke above 161, we had a sharp rally back up to 162.45, where we found a reaction and price was stalling. At this time, we can see a lot of indecision in the market, but based on the market sentiment, the overall structure on the daily and weekly time frame, there's a very high chance that price is going to continue to push higher. What we're looking for here is a break of 162.41 to indicate that bullish sentiment. And as long as we stay above 161.48, then we're good to go. If we get that break, then we expect targets to get to 164. I doubt price will go any higher because based on the outlook, this is the recent high that was put in around 28th of March. And I do think we might have a reversal around this area. Like, guys, I mean, I know that didn't even sound cool, but, like, that's just, it's shit, man. We don't need to know this information. Now, the reason we don't need to know this information is because we are day traders. Every single piece of information that you trade on your intraday time frame is moving from your hourly, 30-minute, 15-minute, and 1-minute time frames is derived from what?
One candle.
One single candle. If you don't believe me, let's check it out. So we have this and this. Between this level, what do we have? Okay, this is a bit ugly. Let's move down to the 5-minute. Okay, that's a bit ugly. Let's move up to some more cleaner information here so we can highlight this point. What time was that candle? Oh, 2 o'clock candle. That's fine. Let's go to the 6 o'clock candle. When you want to be trading this pair. Okay. Now, that one candle creates what? Structure, trends, structure and trends, structure and trends. This is what you're trading. Every trade, every entry that you send into the charts this is what you're sending us or sending for yourself. But you get what I mean. Where is that derived from? A single candle's movement. If a single candle's movement can create that much structure on intraday timeframes, how relevant is the information to the left?
Not good at all.
I mean, for day traders, it's really irrelevant. It's really irrelevant. Now, I know this is very foreign to a lot of you because we've all learned differently or we've all been taught differently. to look at structures, to look at retests, etc., etc. But when does retests, when do patterns, when does structure become important?
Only on our trading time frames, our entry time frame.
Only on your entry timeframes. Let's put this into perspective. This single candle right here is 4 hours worth of information. How many of you have the luxury of sitting down at your desk for 4 hours to trade and watch the charts? I don't. I like to get to the charts at 6 o'clock and see if I can get and trade within the first 2 hours. I'll see where my mood takes me by a New York session. If I feel good, I'll look again, maybe another 2 hours. But if my mood's not good or I'm tired or I don't want to trade, I'm not trading. If I don't hit the London, I'll hit the New York like I did today. And I look to spend 2 hours of focused time. If I can't find 2 hours, then, well, I mean, I'm experienced now, so I don't need to sit there for the whole time. I can just set alerts or I can just check every 15 minutes. But the point is this, you're sitting down at your charts for 2, 3, 4, 5, 6, 7 hours. Let's just call it 4. And that's what you're looking at. That's the information you're looking at, a single candle. So why is this so relevant? Well, this is relevant because if we add a confluence to this, what we can then do is start to predict potential directional bias and identify high probability trading setups. How do we do this? So this is pre-London. Think about this. How could we potentially predict high probability trading setups? What can we do?
Currency strength.
Very good. Now, how many of you understand currency strength? Okay. One person said no, majority said yes. Let me tell you how you identify currency strength. This is the 6 o'clock pound JPY candle. Okay. Look at the previous candle. What information is this candle telling us? This candle is telling us that pound is strong because it's a bullish candle, meaning anything on the left is bullish, anything on the right is bearish. So this bullish candle is indicating what? That the pound is strong. How do we add confluence? We go down to another pound pair and we identify the information that we see. What status is this current 4H candle at the same time that we're looking at this current 4H candle?
Bullish.
Now we have confluence that pound is strong. Now you notice with the 10 o'clock candle, look at this wick rejection here. This wick rejection is indicating what?
Indecision.
Indecision. So that means that what? The pound is weak or USD is strengthening?
USD is strengthening.
Correct. Because if the pound was weak, we wouldn't have a full body candle like this. So now we've just identified pound strength based on this confluence. We're starting to identify here a potential weakness in the pound, which is not true because pound is still strong. So that must mean that the dollar is strengthening. So the last piece of the puzzle that we have to piece together is identify what is the yen weak. If we go over to our symbols and we take a look at euro yen, what directional bias should that market structure be, or the 4H candles?
Bullish.
Okay.
Bearish.
Bullish. Yen weakness.
Oh.
Remember, euro on the left, strength, yen on the weakness, bearish. Here we go. Bullish and bullish. What should we see with New Zealand dollar JPY? Bullish and bullish. What should we see with USD JPY? Bullish, bullish. Now, you guys may be saying, or some of you may be saying, well, this is hindsight. It's not hindsight. What it is identifying the previous behavior of the market, adding the confluences with your currency strength, then identifying that sentiment, and then making a decision to execute a trade based on that information. That moves us on to the next step. Let me ask you all a question. If you go through your analysis and you identify after this close that pound is strong, you check pound USD and pound close strong as well. You then identify that the dollar is showing signs of strength, so you let go of pound USD because you don't want that. Resistance. So then you go over and check New Zealand dollar to see if New Zealand dollar is strong. Then you go to USD JPY to see if USD JPY is strong. We isolate and identify that. Guess what? yen is weak. Now, based on that, that analysis and everything that you've gathered, you've got one choice. And I speak about this all the time, but now I'm explaining this vividly. You have one choice. After this candle closes, because this is all you're doing in theory, you have to make a decision and try to gather as much information you can to identify the directional bias of the market. You have one decision at this stage, traders, one decision at this time. You got a gun to your head. Are you taking a buy based on all this information that you've gathered? You've identified the shift in momentum. You have a previous bullish close and everything else that we gathered. You have a gun to your head. What do you anticipate the next candle to be?
Bullish.
Bullish.
You have one trade and a gun to your head. You can only suspect that the next candle will be bullish. That is all you're doing every day when you take a trade. Anticipating the market will go in your direction and hit take profit. Anticipating the market will go bearish and hit take profit. So why can't we do it now? When we've gathered all this information and added the confluences, identified the sentiment of the market, seen evidence of a bullish close, you have to. And this is where the two candle theory derived from. Now, remember what I said? You trade a single candle. We move on to the next point. When is the best time to buy this candle?
After the pullback.
Let me ask you something. Is this a good entry?
Yeah.
Is this
Yes.
is this a good entry?
Yes.
Is this a good entry?
No.
Okay. Now, this is the point. Guys, look at the charts. And these are all 4 hour candles. How many candles close bearish and how many candles close bullish on a daily basis? All of them, near enough. Every single one of them, near enough, closes bullish and bearish every single day. When you move forward and you start to understand these fundamentals, look how easy trading becomes. If we see this candle's close bullish, we've identified the sentiment of the market, we've isolated yen weakness, we've seen pound strength. The previous candle closed above a key level where it failed to close above for a long period of time, and this candle starts turning bullish. Why do you need any more information other than the fact that the candle was turned bullish and to enter your trade like this? Why can't you do this?
Maybe we want to trade the bull back.
It doesn't matter. Like I just said, every candle closes bullish or bearish. So let me move away from that example. Why can't you buy this candle? Why can't you sell this candle? Is it not the same thing every single time you take a trade? You are just anticipating that the market will go in your direction. Why can't you sell this candle? Look at that. Why can't you just sell that candle? The candle's gone red, sell it. The sentiment of the market is down. Previous candle closed bearish. The candle's red, just sell it. This candle will find support at this area here in the market. You can see the big wick rejection, price closing above. Why can't you buy this candle here? Look, why can't you just buy it? I tell you why you can't buy it. Firstly, you're too scared because there's not enough confluences, or there's not enough patterns, or there's not enough wick rejections, or there's not enough everything that you want to see because of all the noise that you have in your head about trading, versus the simplicity of knowing that a candle has to close bullish today or close bearish today. So if this candle turns red, sell it. If this candle turns green, buy it. The second thing is as well, is that most of you, after you identify potential trading opportunity in terms of confluences, which most of you are probably right most of the time, what do? You scale down, and then what are you looking for? Perfect entries. Now, when you see me post a trade and you see things like this, you say, oh, Rox, why did you enter here? It doesn't make sense to me. And then I start getting questions on Instagram and YouTube. Oh, yeah, but why didn't you enter the breakout here? Why didn't you enter the breakout here? Why didn't you enter the breakout here? Why do you think I entered here? Well, I'll tell you why. Because the previous candle closed bullish. So this is the information I'm not going to buy, because why am I going to buy a top of a candle? What I'm going to wait for the market to do is open on the next 4H candle, create the bottom wick during a high volume period time, which is pre-London. I'm going to look for the sentiment of the market to shift in my favor. And then I'm going to look to take the trade based on the information, wherever I want to enter, above that high, above this high, doesn't matter, based on the information that I get from the lower time frames, which is having full faith that the next candle will continue bullish after the previous candle turned bullish during the high volume period, and execute my trade. Now, let me show you this trade again. It makes sense now that I've explained it, right? But if I do this, how many of you will question this trade and try to figure out why I took it? It doesn't make sense. What I'm doing here, traders, is I'm only scaling down to see if I can get early signs of bullish or bearish candles to close in my direction, to isolate a safe area on the intraday timeframes to place my stop loss below, to then simply, just simply take advantage of this. A single candle's movement. And the range of this candle, 73 pips. That's why you scale down. But that is why you don't trade like this, in terms of just entering with full faith that this candle's turned green and that it can continue green, because you scale down and there's too much noise and you don't understand the correlation between your higher time frame and lower time frame. Does this make sense?
Yeah, Rox, can I ask you a question, please, on the 5 minute?
Yeah.
Just back on the 5 minute one. Sorry, I haven't been around for quite a little while. For me, I'd just be looking at that we've broken above. Are we going to come back to get a retest in the area, and then look at the little red candles? For me, as long as I'm above that high, I'll be quite comfortable. But I'm 1 minute trader still. I haven't done the 15 minute.
Yeah.
You see what I mean?
Yeah.
I'd be looking at something like that.
Okay, guys, let me tell you something. Most of the trades that you see me take with beautiful patterns, most of the trades that you see me taking here with all of these beautiful patterns, you can see Instagram, yeah?
Yes, sir.
Okay. None of these were taken based on the pattern. None of them. Well, yeah, well, 90% of them were not taken based on the pattern. 90% of them are taken based on what I'm telling you now. And then guess what happens? The patterns line up. Does anybody know why? Okay, if you don't know why, let me explain. If this candle closes bullish, what does this area in the market become?
A key level.
A key. Oh no, don't say key levels. Forget about key levels now.
It's a higher high.
Correct. So on an intraday time frame, that creates what? A higher high. When this candle opens and creates this wick, what does that create?
A lower high.
A higher low.
Higher low.
Yeah. And then when this market continues to push bullish above that previous level here, what does that create? A new higher high. Okay. Now, if I went down to the 30-minute or let's say 30-minute or 15-minute time frame, what pattern would this be?
Break and retest.
Correct.
Break and retest.
Correct.
Break and retest.
From an hourly 30-minute perspective. If I went down to the 15-minute time frame, what kind of patterns do you think I'm going to get here?
Double bottom.
Yeah, maybe a double bottom. If I go down to the 5-minute and 1-minute time frame, what kind of patterns do you think I'm going to get here? Maybe a nice deep pullback, or I might start to get what? Intraday trends and break and retest on the 1-minute time frame. All derived from this information here. Let me ask you this question. What is more important? The patterns I trade or the process that I approach to the markets with?
Process.
Correct.
All about the process.
So I am not concerned about patterns before I'm concerned about the sentiment of the market, the confluences that I add, and how this candle starts to form in terms of creating a wick and continuing bullish. So if I wanted to, I could just do this any day of the week. Then when I'm ready to make it look pretty, I can scale down to the lower time frames and do this. I mean, this is not so pretty, but start doing things like this. Let's go 5-minute. I can see the pattern in a 5-minute. Okay, watch the entry here. And here. Okay. Let's remove this one. Is this a good entry?
Yes.
Is this a better entry?
No.
It is.
Yeah.
Both of them are exactly the same. Both of them are exactly the same. And you see how perspectives can change the minute we start seeing noise, because everybody's focusing on this as being a great trade because you understand what I'm saying. And some of you don't, and you see this to be a better trade because this is what? A pattern. A pattern doesn't add confluence to the trade. Let me just remind you of that. A pattern is only an area in the market that you scale down to either do two things. Well, three really, but initially to get a better entry with earlier signs of the market shifting your direction, or to place your stop loss behind structure on the lower time frames to have a smaller stop loss so that you can take advantage of bigger risk to reward ratio trades. Does this make sense?
Yes.
Okay, because when you go to the 4H time frame, look where the stop loss is placed. It's not placed below the structure of the 4-hour candle. It's placed within, and sometimes it's even higher. So when you scale it, when you're scaling down, all you're trying to do is isolate an area in the market where you can rely on the formation of this structure and say, well, I want to enter on the breakout of this high. So now instead of having to use the 4H wick, which is down here, you can rely on the 1 minute formation, which is here, giving you bigger risk to reward. So what you want to be doing, traders, and this is not just for the 4H, this is for every single time frame you trade, is understand some key elements here. The first thing you want to do is come to your charts in the morning and you want to say to yourself, okay, I'm on New Zealand dollar JPY. This is my time to trade. I can see that the previous candle closed bullish. Now I'm anticipating that New Zealand dollar is strong. What I want you to do is go over to New Zealand dollar USD and see if the previous candle closed bullish. What candle was that? 2 o'clock. Previous candle closed bullish. This one did not close bullish. Oh, it did close bullish. Let me just check that time again. Yeah, 2. Okay. This candle did close bullish. Now, when you're looking at this, I just want you to think about this from a logical perspective. If the market at this time is failing to break the structures, are you looking for buys or sells?
None.
You have a gun to your head.
Buys.
Okay, you have to take buys. Remember, what are you relying on? One candle to do what?
The close either bullish or bearish.
Correct. So you would be looking for buys, but maybe you don't like this structure. So do you need to take buys? No. You can go over to New Zealand dollar JPY and say, hold on, I've seen that New Zealand dollar is showing some sort of signs of strength here. I don't really rely on it because I can see that it's a bit iffy. But if I go over to New Zealand dollar JPY at the same time, I can see that there's a lot of strength in the New Zealand dollar. Let me just check if it's New Zealand dollar strength or is it yen weakness? 2 o'clock. It's yen weakness. Okay, cool. So now I know that I'm looking for buys because yen is weak. We can see that there's an element of strength here. We're not breaking the lows. It's understandable and it makes sense. So what am I doing now? I'm saying to myself, at this stage, I have one choice. Am I taking buys or am I taking sells based on today's behavior? The answer is I have to take buys, given the evidence. Once you've identified your currency strength and weakness, the sentiment of the market based on a 4H candle close, you formulate a plan to take a trade in either or direction. And once you've made up that plan, you stick to it. So I, at this stage, am looking for buys only. What you're then doing is you're identifying the area in the market where price needs to break above, where price can pull back to, and where you don't want to take a trade if price passes. Let me explain why. This area is classified as what area?
The 50% retracement.
50%. 50%
Right.
retracement
Why do we look at the 50% retracement?
for better entry.
Yeah, what is the pattern though that we're familiar with?
Double top.
Break
Double
and-
bottom.
Break and
Higher
retest.
low.
Okay,
No.
it would just be a retest of previous structure.
Yes, yes.
Okay, if price doesn't pull back to this level here and this starts to form, what is this called?
higher low.
Correct. If you don't get a trade in this region and price starts to break above, what is this called? A breakout. Can you see how every strategy is derived from? From this forming and this forming. So you can have your retests, your deep pullbacks, your double bottoms, your higher lows, your break and retest, your breakouts, and whatever it may be, all from this candle. At this stage, you've identified your sentiment. The next stage is to do this. Mark your high, your 50%, and your low. If price passes past this low, are you taking a trade? Yes or no?
No.
Okay. The reason why is because the sentiment of the market and the behavior has changed. 4H candle is everything you need to know. If the market closed bullish and this candle doesn't follow through bullish, you do not want to be in the markets. After you've done this, the next thing for you to do is to scale down to the time frame of your choice. So let's say I'm trading the 15-minute time frame. I'm now on the 15-minute time frame. I identify the area in the market where that candle closed. Now, when we're on the 15-minute time frame, what do we see here? We see structure that resembles higher highs and higher lows. This is the area in the market where that previous 4H candle closed. Once this candle has closed, I've already made a decision in my mind that I'm doing what? Taking buys. Now, if I wanted to take a trade here because price rejected and then we can start seeing price pushing bullish and I wanted to take a trade here, is this a good trade?
Yes.
Why is it a good trade?
Because it make it a new high and it created a like a level you could put your stop loss under.
Correct. But what has happened here? Remember, everything to the left is what? Previous 4H. This is previous 4H. Remember, we've already made the decision in our mind to buy based on everything that we've identified. Nothing changes here. I know that this is a key level during a high volume period. If price starts to break above, is this a good buy? Absolutely. Because if price starts to break above, that means the 4H candle is doing what? Pushing bullish. And remember, I've got it in the back of my mind that I'm only anticipating what to happen? The 4H candle to close bullish. Does this make sense?
Yep.
Traders?
Yes.
Okay. If I wanted to enter after this candle closed bullish and put my stop loss here, is this a good trade?
Yes.
If I wanted to enter after on the break of this candle with my stop loss below this key level now, is this a good trade?
Yes.
The reason why it's a good trade is because I'm still only anticipating that 4H candle to continue bullish. If we want to make this complicated, what we can do now is we can scale down to, let's say, our 5-minute time frame. What would we now classify this as?
Break and retest.
Correct. If you need that added confidence, that's fine. Can you enter this trade?
Yes.
If I wanted to enter earlier on down here, could I enter this trade?
Yes.
If I wanted to go to the 1-minute time frame and identify what's happening here, I mean, 5-minute and 1 minute very closely lined up. But let's say this is the first
break even. That's what that is there.
Yeah, that's horrible. But let's say you enter the trade here. This is probably a loss, this one, because it come back. But yeah, loss. But let's say you took the trade here on the early signs of this bullish candle bouncing off of this level. Could you take this trade here?
Yeah, you could. It's horrible, but you can.
Could you take the trade here?
No, it's not it's not back in the actual retest zone. So no, not for me.
Not for you. Okay. Could I take the trade here?
Yeah, you can. Yeah, 100%.
The reason
you've had your rejection, ain't you?
Correct. The reason why we can take these trades anywhere we want is because we've identified the behavior, yen weakness, New Zealand dollar strength, previous candle closed bullish. We anticipate the next candle to continue bullish because we've got a gun to our head. We have to make one decision. And then we just identify it on whatever time frame we choose to identify it on based at the confluences that you want. 30-minute candles pushing bullish. Remember what I said? Why not buy? 15-minute candle pushing bullish. Why not buy? Or take the breakout. 5-minute structure on this 5-minute structure is illustrating what? a break and retest. Why not buy? Etc. etc. And everything that we're doing right now, guys, please, I need you to understand this. Everything that we're doing is simply based on the information we gathered previously, anticipating, adding confluences to New Zealand dollar strength, yen weakness, and then anticipating this candle's close bullish. And that is all we are doing. Does this make sense? Does anybody have questions?
Hey, Rox.
Hi.
How you doing?
Good, bro.
Just a quick question. Say, for example, we're trading 15-minute, 1 minute.
Yeah.
Can I approach looking at the 15-minute as how we looked at the 4-hour?
Bro,
as the 15-minute is what gives the direction.
Bro, I just given you the holy grail. It is.
So always,
it is the
always with the 4-hour.
Nope. It is the fundamentals that you need to concentrate on, everybody. Okay. And it is what I've just told you. So now let's go to the 15-minute time frame. Let's take a look at this. This candle closed strong bearish. Do you agree?
Yes.
Isn't it pretty convincing that it broke a level in the market?
Yeah.
Are you identifying a structure in the market where price was pushing bullish and now we're starting to see price failing to break above?
Yeah.
Indicating what? Potential depletion in this sentiment? Everybody agree with this?
Reverse. Yeah.
Okay.
Yeah.
If we take a look at New Zealand dollar USD, are we seeing a similar sentiment where price is pushing bearish?
Yes.
Okay. So that could mean what? New Zealand dollar weakness or yen strength? Let's take a look at euro yen. Is yen going down? Absolutely at the same time. So now what do we do here? If price breaks above here, we do not buy. If price trades within this range, it's good for sells. And if price breaks below, that's our breakout. Retest, breakout, void. Now what do we do? Scale down to a 1 minute time frame. What can we identify here? This was the previous 15-minute candle close. Now what structures do we have here to work with? We have a structural lower high, lower low, lower high. What do we anticipate after a lower high is formed? A new lower low. Stop loss above wherever you want to pull it. And there's your money, baby.
Yeah, I got this. Just one little question to add on to that. We're talking about currency strength. That is derived from the 4-hour.
Yes, but if you're using the 15-minute, you won't need to use the 4-hour.
Okay, so you still use the 15 even to decide currency strength. Okay.
Correct. Because remember now, the range of what you're looking for when trading the 15-minute is based on this. A single candle's movement again. So you're looking to take advantage of this range because on the higher time frame, let's say you're trading the 4-hour, your range for your stop loss will be, let's say, 12 pips because you're taking advantage of potentially a bigger move on the 4H time frame. But when you trade in the 15-minute, you're taking advantage of a smaller range of the candles. So let's say you got in here on the 1 minute, you're looking to take advantage of a smaller range like this. Does this make sense? Okay. Yeah. Now, what you do to add confluence to this is you identify the structure of the market just from a logical perspective and say, right, we're starting to see bearish behavior here. Okay, we're starting to see bearish behavior here. So New Zealand dollar weakening, is yen strengthening? We're starting to see bearish behavior here. And then you add that confluence. Because what will happen, what is happening now with this candle on the 4H?
Storage candle pushing down.
Correct. This is why we need to connect the dots, right? Okay. So let's say you come to the market, maybe it didn't push up as much as we thought it would. What's the time? Okay, so the new candle's open. But if this candle closed bullish, what is your sentiment?
Bullish.
Correct. If you go to the 15-minute time frame and you start thinking that it's bullish and you see that this is closed bullish or whatever else, let's just say this was a great candle, yeah? You're going to look for buys. If it was, no, how do I explain this? Yeah, that's hard to explain. Just use the 15-minute, okay? And then just look for your confluences like this and say, okay, cool, I'm getting a good gauge of what's happening. Mark your level. Then what you're doing over here is you're then identifying those structures to support that. So that's price failing to break. We have a break below a level here. And then now you can add your pattern, which is this information here. Does this make sense?
Yes, thank you.
all you're looking to do is just take advantage of a small shift on one 15-minute candle.
Yeah.
Okay.
Yeah, thanks.
All right. 1 hour, exact same thing. Okay. Let's say we're looking at hourly. We'll go over examples on a daily basis. Tomorrow we'll start with 4H and 15-minute. Then we'll move on. But let's say here now, okay, you need to think about this logically, guys. It's really that simple. I'm not going to do the easy buys because that's too easy. I mean, you guys should have smashed those buys. I mean, look at that. Jeez on peas. Let's do this sell. It's harder. Okay. Look at this structure. The previous hourly candle closed bearish. Can you look for a sell?
No.
You could, but
Yeah.
it's risky. Huh?
All right. You've got a gun to your head right now. Think about everything that you know about trading. You've got a gun to your head. And you have one choice to take a trade. That previous candle has closed bearish. The structure of the market is overextended. We're in a very strong push phase. We need a higher low before a continuation higher. Can you take a sell?
Yes.
Yeah.
Can you take a buy?
Yes, too.
You can't take a buy. This candle closed bearish. We're not playing Connect 4 here. This isn't, you know, let's go red, then green. It is, if this was green, you take a buy. If this was green, you take a buy. If this is green, you take a buy. If this is green, you take a buy. If this is green, you take a buy. This is green, you take a buy. If this is green, you take a buy. Etc., etc. You get the point. So if this candle closed bearish, you cannot buy it. Because what happens now is you miss the fact that the sentiment has changed to bearish. So what you do is you think that it's still a buy because you're looking at this structure as a whole or collectively. You scale down to your lower time frames, you see a retest, you take the buy on the first 5-minute close, and what happens? See you later, mate. You must stick to this, guys. You cannot take a buy if the candle just closed bearish. Can you not? Did anybody take these buys? If none of you took these buys, then we don't want to be taking buys here if you can't take the obvious buys. Okay, so listen, can you take this sell? Yes, you can. Is it wise to take this sell? Probably not, because you can see the sentiment of the market has been pushing bullish. But if you wanted to, you could, because we reasoned that the market is overextended. It's a very strong push phase. We can anticipate a pullback exhaustion. Now, what are we waiting for? We isolate our candles. What are we waiting for? We're 1 hour and 5-minute traders. We're isolating our single candle. What are we waiting for? We're waiting for the market to create this information first and then start turning bearish. There you go, guys. In 1 hour, 3-hour trade. How hard is that? Simply based on the fact that this candle closed bearish, previous structure is extended. Now this candle is closed bearish. If we start shifting bearish, there's a high chance we close bearish. Simple process. Now, this is where it becomes difficult. If you come down to the 5-minute time frame, what can start happening? Lots and lots of noise. Now, how many of you would have missed this whole trade because of this information here?
Yeah,
How many of you?
I would.
Everybody would have. But if I took this trade after this candle closed and placed my stop loss, let's say above here, because I just felt like it. Just go for one, whatever, don't matter. Who's going to understand this trade if I sent this to you in the chat?
No.
Nobody would. But if I isolate the area in the market where that candle previously closed, maybe I wouldn't have taken it there. Maybe I would have waited for that to close and take it on the break, whatever, okay? But if I isolate that hourly candle close, what am I going off of to take this trade?
1H pushing bearish.
Correct. 1H is pushing bearish. The previous, let's even take it here because this looks more reasonable. I'll be honest with you, right? The previous candle closed what? Bearish. 1H is pushing bearish. And the only reason why I'm down here is to try and take advantage of this. Nothing else. The point I'm trying to make, it doesn't matter what it looks like on your entry time frame as long as it makes sense on your higher time frame. How many retail traders took the sell? Probably 1% of them. Why? Because they do this. Consolidation, markets in an uptrend. Oh, look, buying opportunity all morning, all day. It's been pushing bullish. Guess what? New Zealand dollar strong, yen's weak. Time to take a buy. And then what happens? The market falls down, stops them out, and they shit themselves. Whereas there's me, who just goes to my hourly and looks at this and says, from a logical perspective, what is happening? Strong bullish sentiment, blah, blah, blah. You know what? The right chain of thought is, I've missed all this move. Time to get away from the charts. But if you're sitting there and you're trading and you say, okay, cool, what's happening? Well, that candle closed bearish. You don't have to rush, remember? You don't have to rush. You've got 5 minutes or 10 minutes or 15 minutes to make a decision. No one says you can't enter down here if you want to and go for a one-to-one, because you have to build that belief system that this candle's going to close bearish based on the simple fact that the previous candle closed bearish. Then you just add those added confluences by going over to here and saying, well, what is making sense right now? The market was pushing bullish, is now stalling. Then we had a break of a consolidation with that momentum shift. Do you know what? I like this entry better. I trust that the momentum shift's in place, so I'll safely put my stop loss above the previous candle because that's what I'm comfortable with today. And then I go for my targets, 1 to 2, whatever it may be. It doesn't need to make sense down here, guys. It needs to make sense up here first. Now, what we want to be doing, exactly how we've been doing it elsewhere, is just making sure we're adding confluence. So we want to identify that New Zealand dollar is weakening. At the time, what are we identifying? We may not see a red candle, but what do we see? Logical thinking, we're seeing what? Price is failing to break above, meaning that there's not enough va-va-voom for New Zealand dollar to break through this. Okay, makes sense. So we have a bearish close. We don't have a key level there. Well, we do, but we have a bearish close instead. Let me see if the yen is starting to strengthen. Oh, now we're adding confluence. Look here. We have a bearish close on euro yen, which means yen is showing signs of strength. We have New Zealand dollar USD failing to break above this level. So New Zealand dollar doesn't have that va-va-voom. And we have a bearish close here on New Zealand dollar JPY. Alarm bells should start ringing. You should revert back to your approach and say, I have a gun to my head. What can the next candle be? Can it be bearish? Well, there's a high chance. Logical thinking, strong push phase in the market. The market is now showing signs of a depletion in New Zealand dollar strength from the confluences that I've looked at. And we're also seeing yen strengthening. I have a gun to my head. I have to make a decision, buys or sells. Well, I think in this instance, it makes sense to sell because firstly, we can't buy. So we'll look for the sell. If I'm looking for a sell, what am I looking for the market to do? Well, I want the market to trade below the high, break the low, or come back to 50% for a retest. Okay, cool. Let's go down to the 1 minute time frame. Let's see what's happening. I don't want to buy in here because I'm really not comfortable because you know what? I'm just not comfortable because I'm still scared of the noise. Fine. On the 1 minute time frame, you have an area in the market where that hourly candle is now shifting bearish. You get a retest into a key level, and now you can start saying to yourself, okay, it would make sense that if price starts to break wherever you want, everyone has a different approach. If it starts breaking this area in the market, I'll look for a sell. Why does this continue to make sense? Because all you're anticipating, remember, is that hourly candle will close bearish. Welcome to the Holy Grail. And this is nothing special other than the fact that understanding what? A candle has to close bullish and the candle has to close bearish today. Identify your entry time frame, go down to your entry time frame simply to place your stop loss where you are comfortable. For bigger risk to rewards, for safer, for whatever it may be. But never forget, if this candle is in motion, then in theory, there is nothing wrong with just doing this here like this. And if you think I'm lying, look at the candle. Did that not close bullish? 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 Now, some of you might say this to me. Oh, Rox, but what if it creates the wick and I enter and it starts pushing bullish and then it comes and creates the lower wick? Guys, what's this called? What's that called?
Nothing.
Nothing. It's just a bloody stop loss. You have them all the time. Get over it. It's going to happen. Guess what you do? You walk away. Come back the next day, pushing bullish. I know it's not the next day, but work with me. You take the trade. Guess what happens? You decide to hold it. It doesn't come back to stop you out because after it created the wick, it went bullish and continued up. Are you complaining now? No. Did we change anything? No. We still believed in the fact that the candle, once it turns bullish, we add some of the confluences, it's got to close bullish. And same here, it's got to close bullish. And now can you see the power of confluences? If you add those confluences, you identify high probability trading setups, identifying the behavior of the market, then scaling down at the last minute to see if you can find structures to get a better entry or a stop loss placement for bigger risk to rewards. And that's all you're doing on the lower time frames. Other than that, guys, have faith, have belief that if the market is talking to you or pushing bearish or pushing bullish, that candle's got to close bullish or bearish, execute the damn trade, and that is it. Trust the process. Does this make sense?
Yeah, Ross,
Yeah.
I have a quick question.
Sure.
So if we believe it's going to close red after the first one closed red, so it doesn't really matter if it creates the wick, right?
The wick.
Yeah, wick. So the wick is only
Some candles will create wicks and others won't. That is something you're going to have to specifically specify in your trading plan. This is what we call creating rules. I'm the trader that waits for the wick first. I'm the trader that will enter with or without the wick. How do you know the right answer to that question? You execute enough trades to gather the data to then identify what is working and not working, and you eradicate what's not, and you focus on what is.
makes sense. Yeah.
Do we have other questions, guys? Does everybody feel a little bit more clearer about approaching the markets in this fashion? It is stupid simple. And I know that the 5-day course there, Masterclass 2.0, there's 3.0, there, 4.0 there. Just trust me, guys. As I continue to grow, I will continue to help you. But I don't think that there is any other concept out there like this. And I say that so humbly. I really do. Because a lot of concepts and strategies that you trade are discretionary. What you cannot argue with me about, and why I will always be right, is that at some point today, a candle has to close bullish and a candle has to close bearish. And you cannot argue with me about that. I really want to drive this home. At some point today, if you take a buy here on an hourly candle, at some point today, one has got to close bullish. Meaning if you scale down and do this, you'll win your trade. And at some point today, a candle has to close bearish, meaning that if you do this and you take a sell like we just illustrated, a candle's got to close bearish. Let's think about this. Go for 1 to 3 risk reward ratio trades. Identify when the candle turns red, put your stop loss above. You lose 1, you lose 2. But you continue with that process and you enter here and you get a 3R. Then you do it again and you get a 3R. And you do it again, you get a 3R. Why should you fear trading? Why should you fear getting results? Just because you lost the poxy trade, we know at some point today, another one's got to close bullish and another one's got to close bearish. Are there times where the market's going to do this, guys? Absolutely. Well, I know we're highlighting all the best right now, but if the markets are doing this, what do? We identify there's no volume and we walk away. That is called minimizing or mitigating your risk. If you take a trade and it was bullish and it turns bearish, guess what? Forget about it. It's just a losing trade. If you take a trade and it pushes bullish and stops you at break even, forget about it. It's just a break even trade. Eventually you'll come to the markets and you hit a trade and you can hit a trade and you can hit a trade and you can hit a trade because this candle closed bullish, this 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 closed bullish, closed bullish, 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 bullish. And even here, this really dumb trade that I don't want you to get into, but it started turning bullish. So I said, let's scale down. Let's decide to take a trade. And there you go. There's your 3R. 1,000 to make 3,000 in 1, 2, 3, 4, 5, 6, 7 minutes, 8 minutes. Okay, so this is what I want you to be thinking about and focusing on. I will go over this to understand the principles and fundamentals that I'm telling you, not so much so try to work out the strategy, but understand the fundamentals, take notes, and then tomorrow we'll start with the 4H 15 minute, Next day, we'll start with the hour and 5 minute. Thursday, we'll start with the 15-minute and 1 minute. Now, let me explain something, guys. Please don't just go away and be like, bam, I'm going to start taking trades now. Everything's good. I just want to make this clear. It's 3 o'clock. Some of the best moves have happened already today. The volume is going to start lowering or depleting or whatever you want to call it. Identify your trading times and the trading times that have the most highest probability chance of having that volume in the market and execute them. If you want to do something now, you can go and do some back testing or forward back testing or whatever else. Or even better still, take an hour, half an hour to just sit there and think about what I've just said and process it. Processing information will lead to long-term results. Taking what I said now and trying to apply it to the charts immediately will not do you any good. Process it, let it sink in, wait for this video to upload or get it uploaded ASAP, and then take some notes, rest your brain, and I promise tomorrow morning when you wake up, you will see the charts differently. Promise you. There are a lot of other elements to this you need to understand, guys, but the majority of it is logical. Guys, I have full faith in you that if you listen to what I've just told you, you will start to get incredible results. Okay? Please just hear me out. All right? Have a great one, guys. And we'll catch you a bit later on. All right? Take care for now.